to the J. Kim Show, Hong Kong's first dedicated podcast on investing in Asia. Join us as we survey the land and discover the greatest companies and most profitable investment opportunities in Asia. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insights to you, the listener, with every single episode. And now, on to the show. Today's show guest is Sae Min Ahn, who is the managing partner of Rakuten Ventures. Rakuten is often referred to as the Amazon of Japan. It's the largest e-commerce and internet company based in Tokyo. Sae Min used to work at Google beforehand and now serves as the managing partner and head there. He goes pretty deep into how he looks at investments as a VC and offers some pretty sound advice to young founders who are looking for funding. Let's get on to the show. How you doing, my man? Welcome to the J. Kim Show.
It's very, very good to be here. I am fine. How are you, sir?
I'm doing great, man. It's coming up to the end of the year, and we're really excited to have you on. I had the good pleasure of hosting a Startup Grind event with you not too long ago, and the crowd really, really enjoyed what you had to say. So I was like, hey, I got to get this guy on my podcast. So thank you for agreeing to come on the show.
No worries. I think it was one of the best interviews that I really had. I mean, for me, I like the content so much that when people ask me what venture capital is, what I think of venture capital is, I definitely just send them that link. And it's a really good 40-minute kind of rundown of how I thought about investments and the overall landscape. So, I thank you for, being such a good host.
Oh, no worries. And so we're going to spread the wealth of knowledge here today as much as we can on the show. So why don't, for the audience tuning in, you give a little bit of introduction of who you are and what you do for a living.
Sure. My name is Sae Min Ahn, and I run a venture capital arm of a e-commerce conglomerate called Rakuten in Japan. Well, not e-commerce conglomerate. We do a lot more. We do have a giant fintech sector. We also have a travel vertical. But for me specifically, I run the corporate venture capital arm of that company. We started out about 4.5 years ago, now rounding 5, to understand how to do investments in a synergistic way in Southeast Asia. And then we realized that if we could actually build this out into a full-out business, there could be a way for us to be not only disruptive, but add very nice economic value to the businesses that we are running in tandem by being a pure financial vehicle. And it's now 2018 running into, and I'm happy to say that we've have some amazing companies that we hope will do very well in the coming future.
Great introduction. So let's take a little bit of a step back. How did you come up? Where did you go? What did you study in school? How did you become an investor to begin with? I know that you had a background in tech. Were you always sort of a tech interested type of guy, or did you kind of stumble upon it by chance?
Sure. I mean, for me, if I were to start at college, I actually wanted to become a journalist. So I had actually majored in broadcasting and journalism in a Korean university called Seogang University. The more and more I did this, I also wanted to learn about business. So naturally, I double majored. And, as my time progressed in college, I started to wonder about what business was, why business was, much more philosophically than people would like. I wasn't watching my books, or I wasn't looking at spreadsheets. I was looking at why would a company do A, B, C, D? Why would a company do X, Y, Z? And as I kind of entered the workforce, I ended up working at 2 to 3 startups in Korea and moved on to Hyundai Card, which is the Hyundai credit card company. And then after about a year of that, I ended up moving to Google. And I did about 5 good years at Google, covering things related to hardcore telesales, to looking at publisher relationships, later moving on to business development, and then looking a little bit more at how you would do corporate development for Southeast Asia, and looking at things related to actually investments. And that kind of daisy chained into a opportunity for Rakuten Group. They were looking for, again, as mentioned before, a way to do investments in Southeast Asia. And really, it was Sam's your uncle. It was good timing. And for me, my biggest opportunity cost was that, if this didn't work out, I probably moved back to Google and kept on doing what I loved.
Right. And so before Rakuten sorry, Rakuten right now you are based in Japan or in Korea?
That's a really good question. I'm based actually in Singapore. Rakuten
All
Ventures,
right.
yeah. Rakuten's home office is based in Singapore. Our headquarters is Singapore, and we actually have a satellite office in our HQ, and we have two employees working out of there.
Right, got it. Okay, so for the audience listening in that's not familiar with Rakuten, as Sae Min said, explained earlier, they are large, uh, Japanese electronics e-commerce internet company, also known as the Amazon of Japan. And of course, they have a huge sort of corporate war chest behind them. So maybe you could explain a little bit how Rakuten Ventures is sort of organized underneath, I guess the umbrella of is it Rakuten Capital that is above you?
Yep, yep. So that's a really good kind of segue. So in terms of when I first started out, we didn't have Rakuten Capital, but as our company matured and got more comfortable with the act of investment, we formed an umbrella corporation on top of what I'm working and running, which is Rakuten Ventures. So on top of Rakuten Ventures, there's something called Rakuten Capital, and there's about three pillars of investment departments. One is Rakuten Ventures, which I'm running. There's a fintech fund, which there's a guy called Oscar running, and there's a EC fund, which is run in tandem, which does synergistic investments for e-commerce themed startups in Japan. So these are kind of the three large pillars of investment departments that exist inside Rakuten. And for me specifically, I run a true blue financially driven investment vehicle.
Mm, interesting. And you mentioned that when you had joined, you were basically joining the mandate was basically to expand into Southeast Asia, as in they weren't interested at all within Japan itself. They were interested in spreading out to Southeast Asia.
Yep, definitely. That's also a really good segue. And that, when we were looking at Southeast Asia, at least Rakuten Group, they saw a lot of opportunity not only in Singapore. Singapore was more of a staging ground for what they wanted to do in places like Thailand, Malaysia, and Indonesia. But in parallel to that, they also wanted to do, if we were to actually inject strategic liquidity into specific companies or specific kind of entities, would this enable us to do business 4 to 5% better, 10% better? And that was kind of the genesis of how, the Rakuten Strategic Investment Group came to be, which I took over. For me, the reason why I tried to turn the key and, in terms of kind of calibrate the company to a different direction was that we started to do one or two investments as the Rakuten Ventures, but still looking at more synergistic and strategic needs. But it turned out that we could add so much more value for the group if you were to look at this at a much more transparent perspective of, we simply want to invest in this company because in the mid to long term, we believe that it'll do well, and doing well will also add financial value for the company. And we started to slowly increase kind of the geographic scope of the investments until people were uncomfortable. The good thing is that people never got uncomfortable because because in the end, I made sure that if this was a mistake to be made, it would be made by the single crazy Korean person running a Japanese venture capital company in Singapore.
So I have to ask you, man. So again, I mean, obviously you had a background from Google and Hyundai Card and a few of other places, but how in the world did you land this job? As you just said, a single Korean guy, basically running the venture arm of one of the largest corporate, funds from Japan.
For me, I kind of mentioned this early on before, but I have a insanely low perception of what opportunity cost is. So I going in, I really didn't understand what the costs were or what the risk appetite was here. But I also have to give full credit to Rakuten Group and also Mikitani-san, because it's the kind of a group where if you can step up, and in many ways, the moniker sink or swim is very succinct with hiring top talent in Rakuten, and that if you can perform, we will give you as much girth and berth as you want, as long as you bring in the promised KPIs, OKRs, or overall performance that you want, that the group expects of you. So in that perspective, those two kind of ran in parallel, analogous to each other very, very well. And it's just been 5 years after that.
That's pretty cool. So obviously you are doing quite a good job there because they've, progressively given you pretty much the keys to the car, the kingdom, if you will. Why don't you let's get into some of the investing side now, because I'm sure a lot of our audience wants to hear what if give us a little bit of a background on how you look at investments. What is the methodology that you have concocted when you look at companies to invest in?
Sure. I mean, it's always a mixed bag when I actually look at this, and definitely, starting in 2013 and now, how I look at investments have changed so much. And when I look back at some of the investments that I made, they were thankfully the right investments, but they were done with so much blindness. It makes me actually nervous just to look at old investments. So that I hope that people listening to this podcast understand that I never really started out with a full deck, but what I came to realize is that we simply want to invest in businesses that make sense to us. And what does making sense mean to Rakuten Venture? It really means that does this business have some sort of asymmetrical informational advantage, some sort of sourcing advantage? Where is the actual relationship arbitrage coming from? So, I kind of made this comment when we were doing Startup Grind, but in that perspective, I was saying, look, if you were a person that was trying to build the next Trojan condom in Malaysia, and it happens to be that your father is also one of the biggest exporters of latex, it made sense that this person would try to build that kind of business inside Malaysia. If you were trying to look
Right.
at how to build the next generation of artificial intelligence or computer vision, what was so important and a lot of people actually missed out on was the creation of the right kind of business model and the right kind of cost of goods sold mixed. A lot of people don't understand that a lot of the AI companies coming out right now will have and consistently have a hard time making bank just because all of their engineering force, no matter high quality, is too expensive to actually develop a profitable model out of. So a lot of these things in relation to how can you actually make sense of business and how does that make sense to the investors, amalgamated into our investment thesis and looking at how does it scale meaningfully. And when I say scale meaningfully, and one investor might say that scaling meaningfully is getting to $100 million revenue run rate. And for me, I would say that, if I had the choice, I would rather scale to $50 million, make sure you are able to manifest profitability and work from plan C. So these things definitely were a little bit different in terms of how I looked at venture capital compared to other shops.
Right, right. That's interesting. Any sort of, I mean, it sounds like you've, it sounds like you pretty much had free reign. But I'm curious as to was there or have you since implemented any sort of, metrics or guidelines when you look at companies, sectors, exposure in different areas, ticket size, this sort of thing. What is your formulation now?
Sure. Just to look at what we normally do historically, we do investments anywhere between 1 million to about 10 million US dollars, and we do this, and we don't actually put a lot of emphasis on nomenclature, like, oh, we only do early stage investments, oh, we only do kind of growth stage investments. We
Mm.
don't put a lot of actual kind of emphasis on that because a lot of times by different verticals, the liquidity needs are so different. So if you're trying to build out an advertising technology stack that is very, very next generation SSP ad server, you would need anywhere between $8 to $14 million to actually scale that to a point where you can sell that to the next Snapchat or the next Facebook to actually buy it as a SaaS product. But at the
Mhm.
same time, if you were just trying to build the next OfferUp, which is a very popular C2C platform in the US, then it would cost you as little as $1 to $2 million just to build out a working feasible platform that people get on and to sell their used items. So in that perspective, we just have a simple range of about $1 to $10 million that we would invest in, and looking at more about kind of what sectors do we focus on, we have naturally gravitated, at least for now, towards very strong technical banded companies. So things related to artificial intelligence, advertising technology, data transferal formats and whatnot. We're starting to look at how do you actually do like wireless transfers of data and information a lot more cheaply. So, for example, can we actually utilize some of the technology coming out of Starry, which is a short wave kind of the 5G replacement platform that one of the founders in the U.S. are building out. Is there a way to replicate that in different parts of the world and actually implement that in the right way? So, I guess the shortest answer is that for us, our biggest strength is that we are always open and opportunistic to specific behaviors and specific movements in the market. And to that, I'm even starting to look at biotech companies. There's such a cool company out in the US in Boston called Vaxis. And what they do is they actually utilize silk protein so that when you actually inject that into vaccines, the vaccines become much more resistant to temperature change and also inertial damage, so that you don't need to actually have cold chain and don't need to worry about cold chain breakages. So it really goes and kind of overlaps and reaches far from gamut to gamut.
As far as stage of, are you stage agnostic, or you tend to veer towards sort of the earlier rounds, like Series A and above? I mean, I don't know.
Yeah, I mean, because we're looking at like 1 to 10 million US dollars, we would be considered more of an early stage investor, and we
Right.
utilize the rest of the money that we have as dry powder to make sure that our existing investments are doing well. And one
Hmm.
thing that we want to make sure we do in Rakuten Venture is, along with all the other stuff that I talked about, I really want to focus on not keeping too many portfolio companies in the stable. Like in my mind, I do not want to invest at one time and have in the stable more than 17 companies. I just want to make sure that we have a really good kind of stable portfolio, and the dry powder is left for those 17 companies to grow and become more meaningful.
Right. Interesting. So at this point, you've made a handful of investments, I'm sure, and you're constantly evaluating from internally from above. What are there certain growth metrics or targets that you have to hit? I mean, are there plans to have launch further funds if this one does well, this sort of thing?
Yeah, sure. I mean, if you're looking at what our growth metrics are, what do we view as good performance? Like, how does HQ actually ascribe a score to us and whatnot? Ideally, we want to look at, we do have internal metrics in terms of what kind of IRRs we want to hit and what kind of whack we should be hitting above. But outside of that, we just want to make sure that in our mind and with the founder, we have an agreed upon metric that we say that these metrics are important, and as long as we hit them, we are doing a good job, and then we can continue to actually build out a relationship. So, and going kind of dovetailing that into your question about what do we want to do, definitely we want to actually develop really really great exits, and at the same time develop different financial levers to be able to play more meaningfully in the markets. And when we say that, in the future, in my mind, I don't even kind of only look at the private sector markets. I want to actually understand how can our liquidity also affect the public sectors and whatnot. How does a financial vehicle and investment company actually become much more holistic within itself? And I think when you look at a $500 million venture capital fund, in my mind, I'm also thinking that, oh my goodness, if you can actually build this out into maybe a half and half of private and public sector investment vehicles, this could be a lot more value driving.
Right. Right. That makes sense. And then as far as VC and interacting with the founder, which you mentioned briefly, what kind of a VC are you? Are you one that usually leads around? Are you do demand a board seat? How proactive are you in steering the company and working closely with the founder, providing resources and this sort of thing for their success?
That's a great question. I mean, for me, historically, we have ended up leading a lot of the rounds that we've invested in, but it never has to be that way. I mentioned this even before in our talk, but there are situations where us leading is less of a benefit if there is actually a stronger player on the ground that can be the lead and also help and give advice actively in proximity to the founders. So we've had
Hmm.
situations where we had to make a choice where, of course, we love the company and we want to take the lead and more equity, but definitely we said that we should let the current kind of proximity based leads take the overall board seat and make sure that they can support the company the best they can. Secondarily, we work with founders as much as the founders want to work with us. That's the best way that I can put it. In that some founders know exactly what they're doing and they really want us to kind of take a step back and simply kind of give them advice when it's needed. And for us, we've always been happy about that, but there's also some companies that actively want our participation because the way that we talk about their company is really really thought provoking to them and in some many ways value added. So it always runs the gamut, but again, it's really dealer's choice. And we really follow the founder's lead and making sure that I strongly believe that a founder performs well when he's the most comfortable with himself, and that's kind of my number one priority.
Got it. Well, that's quite insightful. Thanks for sharing that, and thanks for sort of opening the kimono deep into sort of your process. I think a lot of listeners will find it fascinating. So let's use that and segue now into another question about. I mean, this would be for founders who are looking or who are in the room. They're waving their hand at you or doing their elevator pitch. What sort of advice do you have? What things do you look for? Quick any quick items that you look for? Any red flags that you will immediately eliminate prospects from when a founder is trying to pitch funding from your company?
Sure. I mean, the immediate red flag for me is when I look at a discouraged or very tired out founder. In that, I can see that from our interactions, he's done this pitch so many times that it's motorized and it's not about, him being excited to meet me, but just try to get through and go through the motions. So one of the red flags is, the person is much more kind of focused on completing the action rather than having an interaction with me. And inversely, one of the biggest, important green flags I would say is that, oh my God, I love this company, is a company number one that he's working on an industry that I'm interested in, but also he masters his own industry. He knows exactly what's going on, and he knows exactly what's going on in his company. But at the same time, he's able to break down all those complexities and really, really explain it to me like I'm either a golden retriever or I'm a 5 year old, which is the best feeling in life because it actually makes me feel smart for once when I'm dealing with people. Yes, when I'm dealing with people who actually kind of manhandle GPUs and are trying to look at optimizing their TensorFlow units. So definitely, those 4 or 5 red flags and green flags are very, very important to be a person who exactly knows where he or she wants to go in an industry that I'm interested in and that I want to learn more about. But again, a very big red flag is when the person is simply trying to complete the action rather than trying to have a meaningful discussion with me. Because I'm also there to learn something. One thing that I
Mm,
want people to know if you're a founder who's trying to get funding is that investors, at least the meaningful ones that I understand and look up to, is trying to get something from you. They're also trying to learn something about the industry. And when they try to interact with you, please, regard this as a two-way street.
right. Right. That's true because sometimes funders have portfolio companies that are doing the exact same thing as you are and are mining data as well. So speaking of which, what are the areas of growth, the opportunities, the segments in the market that do interest you right now?
I mean, for me right now, the biggest area that I'm interested in is artificial intelligence, but more so in the region of how does a neural network unit actually live on IoT devices and edge devices without taking too much power, with being actually efficient with output. There's a lot more discussion going on right now where, yes, mobile processing units are becoming very, very powerful, but at the same time, we're still not there yet where we don't have to rely on centralized orchestration. So there's been a lot of talk going on among the investors and also the industry people, where you try to understand, hey, by 2030, most of the cars that we see on the highway will have supercomputers, right? People really don't understand this, is that you're going to have at one point, maybe 10, 15 years later, a highway full of cars that have processing units and storage units that would normally be on supercomputers, right? Now, what happens when you get 200 to 300 cars running in one direction, and have basically an aggregate computing power as a small server farm? Well, you're able to actually make a lot of siloed individual clustered decisions that don't actually have to go back to the central server to ask for certain commands. And that's a really, really big thematic change, because a lot of the computing themes that we see today are on the cloud. Cloud is centrally orchestrated, right? But now you're going to have enough computing power on the ground separately that'll be able to make comparable decisions. So that's actually a very big theme that I'm looking at these days. That'll be very, very important. If you dig a little bit deeper in terms of the microeconomics, you can see a lot of the companies that were doing autonomous vehicle driving, that did a lot of the LiDAR-based technologies. You see that there's been a lot of acquisitions and consolidation in the market. Now, what's going to be really interesting in the next 1 to 2 years is what happens to the guys who didn't get picked up. Like, what happens to the guys who are pitching like $200 million valuations off of 4 PowerPoints and a
Right.
couple of lines of code, and they weren't the guys who were bought for $1 billion, and now all the investors who backed those guys are looking for a great exit. And there's actually going to be definitely a large consolidative fold in of these companies that are happening. And it happens in every cycle, just because now, private company liquidity becomes so much easier to come across once the risk profile goes down and opportunity costs go down. So definitely, those are going to be very
Yep.
interesting. A lot more stuff are going to come with biotech. What happens with CRISPR, right? CRISPR is the gene editing technology, which allows you to actually develop specific tool sets to actually augment your genetic makeup. And now they're getting to a point where, number one, they can do it on live animals without adverse health effects for the short term, but at the same time, these things are ready to go to test on human beings. That is crazy. Like, we are getting there. We are getting to the future, and it's all coming to a head. We have AI, we have genetic modifications, augmentations, and at the same time, we're getting to a stage where the medical advancements are dramatically increasing, human life. Even the people who live in the most developing frontier markets are having much more, higher quality of life and dramatic lifespan than people ever did it 50 years ago. So all of these things, really kind of go turn back to how does science actually help, right? And you always looked at science helping out in terms of, oh yeah, we'll make people live longer, we'll make people much more healthier, blah blah blah. But what happens when there's so many people, that there's so much positive effect, that there's so many people living and consuming so much more? So there's a lot of these cyclical discussions that happen, that will be really interesting topics to handle in the next maybe coming 10 to 20 years.
Man, it's both exciting and frightening to me as I sit here and listen to you say it. And we've talked. Everyone talks about singularity and this sort of thing, but then when you actually hear someone else saying it and the way you described it, it's like, oh gosh, you're right. What are we gonna do? We're doomed.
And yeah, and unless we forget blockchain, right? Right now, this thing is consuming more than 134 countries worth of energy, right? Individually,
Oh, it's
right?
insane.
So, right, I mean, we even briefly talked about this, in that this thing is completely not what it was meant for, right? It's, number one, completely centralized in China. Number two, nobody's using it to buy anything. And number
Exactly.
three, it is the most expensive currency to transact with, right? So
Yeah.
the three monikers of what it was supposed to be no longer is relevant here, right? And there's so many weird stories around blockchain and Bitcoin specifically that everyone actually forgets to ask, and they just keep on looking at what are the short-term financial gains.
Exactly. That's really scary to me right now, especially in all this hype. It's like literally what you said. No one even knows what the actual underlying business model, if there is any of these ICOs are. They're just literally betting that tomorrow it's going to be worth more than today, so they're jumping in,
No,
which is
look,
scary.
let me go Area 51 on you right now, right?
All right, let's do it.
Okay, number one, what is Bitcoin solving? Can you tell me that?
It's in theory it was supposed to be a decentralized.
No. What I'm saying is that it's 256, right? 256 encryption SHA. What is it solving right now? What equation it is solving, right? And for Bitcoin miners, then they would say, "Oh, Sae Min, you don't get it. This is just about trying to get the hash and zero, right, or something like that to figure out the nonce. So that once you figure out the nonce, a Bitcoin pops out, right? You know what that is? You know what that looks like? You know those orangutans people experiment on, where they press the right button and the celery pops out?
Yeah.
That's that.
That's that.
That is basically that, right? You're a Bitcoin monkey. That's
Yeah.
what it is, right?
Yep.
And think about this. If it's encrypted, right, then we should be able to actually break the encryption, right?
But the thing is that salary is worth $16,000 a pop now.
Yeah, I know. Yeah, that's a really nice piece of celery. But why has nobody broken the encryption?
Yeah.
Right? This is supposedly generated from what is it, like 15 years ago, a PDF that a unknown Japanese person made, right?
A white paper. He might
A
not even
white
be
paper, right?
Japanese.
Yeah, yeah. So now you're telling me that something built 15 years ago as an encryption module is immune to 5 to 7 generations of computational
Right.
cryptography solving technology,
Yeah.
right? Is there no like question marks that turn into people's heads, right? Is there no contradictions in life that we look at here, right? For me, as an investor, that's what really is weird to me, right? And as the core tenets of cryptocurrency, core tenets of Bitcoin is contradicted at every turn, still nobody asks the question, right? So that is something that really makes me kind of look back and say, what is actually going on with this?
Absolutely. I 100% agree with you. And as an investor myself, not on the actual tech side, but just from a fundamental basis, knowing that it is literally backed by nothing. It's just really difficult for me to justify the price action that we're seeing these days. So thank you for going a little bit deep there. I appreciate that. Last couple of questions. Look, I mean, crypto is so funny these days. I literally cannot go anywhere without having a conversation, and unfortunately, 99% of them know hardly anything. Unlike yourself, who actually knows what you're talking about when it comes to crypto. Last couple of questions I want to ask for you, Sae Min, and thanks again for your time. What is either one mistake that you've made as an investor that you could help caution any investors that are listening into, or maybe just one piece of advice for investors that are looking to maybe dabble in early stage?
I mean, I make mistakes every day, and when I say that, I'm talking about 2020 hindsight is so very much more prevalent in venture capital to me. It's because that you sit on the board and the decisions you make are so close. The latency between the decisions and the effect are very low. So in that perspective,
Yeah.
I think one of the mistakes that I consistently make, and no, actually, when I was just getting into kind of venture capital, one of the biggest mistakes that I made is I was afraid to speak up with other board members. And that I assumed that the other board members knew better. And when I look back at it, the actual board members didn't know better than me, and they were actually also looking for guidance. So one of the biggest things that I understood is that when you have something to talk about, number one, it has to be really meaningful and it has to be really important to the founders, but you should never hold your tongue. That is something that I think I was a lot more shy to do. But now I just make sure that I talk about that very often. And, for me, I think one of the biggest mistakes that I made early on is take the role of the board member for granted. And I've seen board members take that role for granted, and it disgusts me now. But now I have so much more respect for what a board member should be. And I make sure that if I am one, I fight tooth and nail for everything that I could do for a founder and the company. And that's very, very important to me. And it kind of bores into the fundamentals of Rakuten Venture also.
Right. Awesome. That's sound advice. Yeah, I mean, I think that actually transcends to more than just being a board member, because I think a lot of people listening probably have never been a board member, but even, just in life in general and in entrepreneurship and, if you're an investor, this sort of thing, a lot of times, look, investors pride themselves on being the smartest person in the room, but, a lot of times they just aren't. So there's a lot of smart people out there, and it's always important to voice your own opinion. So last question for you, Sae Min. I'm sorry because this might just unleash an onslaught of inbound requests. So you feel free to give a fake contact point here. But where can people find you, follow you, or connect with you if they want to learn a little bit more about Rakuten Ventures?
Sure. I mean, you can find me on Twitter. My Twitter is at Saemin4655. And a lot of people ask me questions, and I try to answer those questions as best as possible. Another good place to find me on to ask me questions is places like Quora. I've been a long follower of Quora, and I really like interacting with the community and answering questions there. So definitely, if you have questions based on investments, if you have questions based on the industries that I'm investing in, I'd be happy to give my 2 cents.
That's awesome, man. And thanks again. I apologize if you get inundated with pitch decks and this sort of thing. But listen, we really appreciate your time, and thanks for imparting your knowledge to my audience. And yeah, I mean, we're looking forward to reading about you more in the in news flow and investments that you make, and wish you the best of luck, man.
Thank you so much for having me.
Yeah. All right. Take care, man.
Thank you.
I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The J Kim Show. I'd love to hear your comments. You can find me on Twitter at jkimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of 2. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.